Good evening, everyone. Welcome to our weekly webinar, Let's Trade Live. This is Wayne, Head of Research and Education on behalf of Fullerton Markets. I warmly welcome everyone again. So as usual, the webinar will be divided into three segments. We'll look at what has happened in the past 1 week. Then we'll move on to the calendar for this week. And finally, we'll move on to the charts to look for trading opportunities. Feel free to type in your questions along the way. I will answer them as they come. So let's jump straight to it. Of course, the first noteworthy news is the press conference by Donald Trump. So it is the final press conference before he's being sworn in as US President towards the end of this week. So of course, as you can see, this is the report extracted from Bloomberg. I have highlighted the president-elect on last Wednesday, left investors with few specifics on the timing and scope of planned policies from infrastructure spending to trade pacts. Okay, so because there has been a lot of hope being built up after his victory, so everyone is very hopeful for something. So in the press conference, there wasn't any specifics at all. So that's why there was disappointment. So as you can see, the dollar dropped since last week. And gold went up as well. So gold is inversely proportional to US dollar. So as US dollar weakens, gold price shot up. So as you can see the chart below, extracted from Bloomberg, the blue line is basically the dollar index spot rate, and white color is actually gold spot. So we are all trading the spot gold. So as you can see, the blue and the white is very inversely proportional. When one goes up, the other goes down. So that explains why the gold price keep shooting up. And for those of you remember our last week's research, we have plotted the Fibonacci. So of course, with this kind of news coming up, the market don't really bother about Fibonacci levels. So it went beyond the 23.6. So later on to the final segment, we can move on to the charts. If some of you request to look at gold, we can look at gold and look for opportunities for this week. The next one is basically something that happened today as the market opened. So some of you definitely would have noticed the sterling has gapped downwards, the sterling dollar and sterling yen, and basically all the sterling pairs. And this is hot from the news just extracted today. So pound slides as much as 1.6% as May reported to seek hard Brexit. So basically over the weekend, there's a report saying that UK Prime Minister Theresa May is planning for a hard Brexit. Meaning hard Brexit basically means they are willing to give up certain benefits that will benefit their economy, basically the trade agreements and things like that. So hard Brexit will be, in summary, hard Brexit is actually not so good for UK economy, and thereby not so good for the sterling. So of course the other opposite is a soft Brexit. So soft Brexit basically, in the event UK is able to maintain their trade benefit, they are still able to access the one market, Europe, and at the same time able to have more control over their immigration. That means they have the best of both worlds. This is termed as soft exit or soft Brexit. So in the event of soft Brexit, the impact on UK economy and sterling is relatively lower. So it is good for UK economy and the sterling. So that's the difference between a hard Brexit and a soft Brexit, and you will continue to hear these terms throughout for the next few months. So of course news has been released, but as you can see the highlighted portion on your screen, this report is also extracted from Bloomberg. It mentioned that the Sunday Times, basically the papers that reported the news, didn't say how it obtained the information, and the Prime Minister office declined to comment on the report as well. So in other words, it is speculations and considered as rumors. So of course some investors may argue that, oh, since the Prime Minister office did not deny it, so it could be true. So anyway, every camp will have their own so-called argument towards that. The real actual plan will only be made known when the UK Prime Minister herself speaks tomorrow. So later when we look at this week's calendar, I will highlight when is she speaking. So just by pure speculation, sterling gap downwards, sterling dollar gap about 170 pips at the opening. So in case some of you is wondering why there's a big gap in all the sterling pairs, this is the reason. Okay, we move on very quickly. We move on to the next segment. We'll look at the upcoming calendar. So this is basically Tuesday, tomorrow. As you can see, the timing on the screen is basically GMT +8. That corresponds to Singapore, Malaysia, and China time zone. So early tomorrow morning at 2:30 a.m., Bank of England, Governor Carney is scheduled to speak. But I guess what the market will be interested or focused on would be where it is way below a speech by UK Prime Minister Theresa May. Apparently, she will announce some plans, some Brexit plans during her speech. So everyone will be interested to find out what's her intention, how she want to approach Brexit. Of course, unfortunately, one thing is the timing is not made known to us. So as trader, we need to be aware. That means for tomorrow, there's this event risk. So sterling may have volatility tomorrow, most likely. Next on Wednesday at 9:30 p.m. This is the consumer price index, basically the CPI that measures inflation. So this is one of the key information to look out for. This is US CPI, and this is our suggestion. Pending long dollar yen, if the CPI is greater than 2.3%, meaning it has to come in 2.4% or higher. So this is one suggestion. But some of you may have the opinion that I don't think the market will move up or move down even regardless of the data, because everyone is waiting for President-elect Donald Trump to be sworn in and watch out for his speech after he's being sworn in as the US President. But this is our suggestion. It is up to you to make the decision whether you want to take up this suggestion or ignore it. And later the night at 11 p.m. it is Bank of Canada interest rate decision. Of course, as expected, we are not expecting them to raise interest rate or cut interest rate. Most likely they will maintain at 0.5%. But the trade suggestion is, in the event if they surprise the market by cutting interest rate, there will be a pending long dollar CAD if the actual interest rate is less than 0.5%. So if they cut interest rate, loonie is likely to weaken and dollar CAD will go up in that case. So that is our suggestion. We move on to Thursday. just to highlight event risk as well. It is on Thursday 3 a.m. early in the morning. So this is Fed's beige book. Basically it's a report. So there's other non-public book, which is the green and the blue book. Basically these three books, these three reports is what the Fed looks at to determine their monetary policy and their interest rate policy moving forward. So of course when they announce this beige book, chances is US will have some volatility as well, US dollar. And of course later the night 8:45 p.m. it is the ECB interest rate. Of course market expecting no changes to the interest rate at 0%. But as a suggestion, if you want to be prepared for any surprises, this would be the suggestion. Pending short euro dollar in the event that ECB surprised the market by slashing interest rate to negative rate. So that will be the suggestion for this week. So very quickly before we move on to the charts, this is just to highlight the accelerator bonus for those of you who have yet to open account with Fullerton Markets. Do explore. Go to our website fullertonmarkets.com/promotions. Check out this most popular promotion that we have. Most of our clients have taken this up. So if you have not taken advantage of it, do check us out. You may want to consider. Okay, finally, we move on to the final section that will go live to the charts. So we'll open it to the floor. Feel free to type in any currency pair and the time frame that you want me to look at. So while you are keying in your request, I'll just do a quick review on the charts that we have looked at last week. So this is basically the chart that we have looked at last week, dollar yen H4. So the red dotted line is the time of last week's webinar, at the time where I gave the comment. So there are two suggestions. One is long. So the comment over here is consider going long after bullish candlestick formation, which is at the blue box. So the criteria wasn't met. And the other one is basically a pending short. If candle closes into the blue box, the bottom blue box, that's where you can consider short. And the first support is around 115.20, which I've mentioned. So if some of you have taken this trade to go short, price has touched the support before retracing upwards. And after 2-3 candles, the price approached it again before heading it all the way up to 116.90 thereabout. And then thereafter it plunged. So there's a lot of opportunity for you to grab. Let me do a quick measure. So from the entry price to the 1150, it is about close to 100 pips of movement. So out of the 100 pips, I don't think it's that difficult for you to grab like 50 to 80 pips out of this move. If you have partially closed your positions, you should have grabbed about 40 pips as well. So this was the dollar yen trade that we have looked at last week. Next, we have looked at pound Aussie daily chart. So pound Aussie, suggestion to look for bearish candlestick formation. Let me shift the words upwards so you can read it. So the red dotted line is the day of the webinar. This is a daily chart. So I given two suggestions. One is if the price retraces upwards towards 1.6850 and then find resistance, starts to turn down in the blue box, in the upper blue box, that will be the possible entry to go short. And the next suggestion is if the candle closes below where the blue box is, you can consider to go short. So if it closes at the blue box or even lower, you can consider to go short. So for some of you, you have taken this short position. Either you would have grabbed, let me do a quick measure, the full move before market closes last week is about 200 pips. So you have entered the trade last week, and before the market closes, if you exit, that will be easily, out of 200 pips, I don't think it's that difficult for you to grab about 160 to 180 pips. But if you are someone who feel that you want to hold it for slightly longer period, you may have protected your position. After all, you have about 200 pips of profit floating, so you could have closed partially and then shift your stop loss to protect your remaining positions. So if that is the case, then you would have taken advantage of the gap that has happened over the weekend. But on average, in a conservative mode, for someone who have taken, I hope you have at least grabbed 100 to 120 pips out of this suggestion. So that's the pound Aussie. And for those of you who are quietly holding these positions, I wish you all the best. I won't wish you luck because don't depend on luck when it comes to trading, just follow your plan. So you have made some interesting interest as well. Not much as highlighted last week, but I think it can buy you a nice latte or coffee somewhere. So we move on to the third chart, which is pound dollar M30 chart. So the red dotted line is the time of the webinar. So I mentioned if candle closes below at the blue box or lower, that would be a possible entry to consider to go short. But it did not happen. It basically is a tail, as you can see over there. The shadow actually shot up and then go up. So that's why I like to wait for candle closing. Wait for it to close first to give me a confirmation. So thereafter did not fulfill this criteria for quite some time, as you can see the price going sideways. So of course, if you eventually took this suggestion at a later stage, which is many candles later, chances is you will hit your stop loss if you have put anywhere below 1.22. So chances is if you're trading a low time frame like M30, you would have placed quite a stop loss, unless even if you place a very wide stop loss, then possibly you could take your profit over here. But based on my experience, I guess if someone who have taken this trade would have expected a breakout, someone who have expected a breakout would have placed a pretty tight stop loss somewhere around this kind of region where the blue box is, and this will stop you out of the trade. The fourth chart that we have looked at is basically Aussie dollar. So Aussie dollar, this is basically the command: scale down to H1 time frame and apply range strategy to trade within the range of 0.7350 or 0.7290. That is the first suggestion. The other two suggestions based on a H4 time frame is beyond the range. One is if the candle closes below 0.7290 at the lower box, consider to go short. And the other one, if the candle closes above 0.7350 at the upper blue box, consider to go long. So for this long trade, it depends on where you place your stop loss. So if you have placed a stop loss, aggressive stop loss, which is tight somewhere at the, I'll change the color of the box so that the red box. Okay, so if you have placed a tight stop loss just below 0.7350, then possibly you could experience a stop up of a trade. But if you place a slightly more conservative stop loss into the range, then this trade would net you quite a decent profit. So of course, this is a good example to tell you entry is not the most important factor. It is important, but it is not the only important factor. At the same time, your exit price is also as important. So if you put a tight stop loss, chances is be prepared that the market may hit your stop loss before going in your direction. But there again, I like to give you the other side of the coin. By placing a tight stop loss, there's a chance that you may hit a very good risk to reward trade. So there's pros and cons in everything that you do. Of course, follow your trading plan. That's the most important. For those of you who have placed a tight stop loss, no worry, it's just one stop loss out of so many trades. You have other profitable trades in future. And for those of you who have placed a conservative stop loss in this trade, then congratulations, you would have net quite a fair bit out from this trade. The full move is about 150 pips. So out of these 150 pips, I don't think it's that difficult to grab about 50 to 100 pips. So that's Aussie dollar. Next chart that we have looked at is oil. So oil over here, red dotted line is the time of the webinar. Suggestion is, there's two suggestions. Again, one is a long suggestion, which market did not give us, did not fulfill the criteria. But the short entry, as you can see, the candle closes at the blue box to go short. So if you have taken this suggestion to go short, I'm not too sure where you would have exit. So if you have exit everything at the first target, not bad either. You have grabbed about 48, about 50 cents from oil. So it is, of course, 50 cents, it depends on your lot size. 50 cents is just the price. So it doesn't mean you will just make 50 cents. So this is about 550 points from oil. Not a bad move. As you can see, the risk reward is about 1:1 to the first target. Of course, if you have placed a partial close, if you exit partially at the first target and then shift your stop loss to your entry price for the remaining position, most likely you would have taken advantage of the next push downwards because the price did not retrace to your stop loss, which is over here. So for those of you who have taken a partial close and ride the trade downwards, congratulations as well. I think that would be a pretty neat profit as well for oil. This is for euro dollar. We have looked at euro dollar as well, daily chart. The suggestion is to go short when candle close into the blue box or lower. Again, the criteria wasn't fulfilled for the trade, and euro dollar was heading upwards last week. So no trade, doesn't fulfill our suggestion. Finally, for gold that we have looked at last week, again, the two suggestions. One is to go short at around 1168 once candle closes in the lower blue box. And the other one is if candle closes into the upper box around 1191, there about the price, possible to go long. So if you have taken the suggestion to go long, you will be looking at a floating profit of about 1,200 to 1,300 points now. Not too bad for gold. I wouldn't say it's a very big move because gold is volatile. So 1,000 over points, because the spread, just for your information, is about 50 points already. So 1,000 over points is reasonable. It's not a very big move, but a decent move. So that's about the 7 charts that we have looked at last week. Not too bad. I think most of, if you have followed some of the suggestions, would have netted some cool profits, except for one, I think, would have possibly hit your stop loss depending on where you put it. Okay, so we move on to this week. The first chart on my screen, Euro Yen daily chart. Let's look at Euro Yen. Okay, Euro Yen daily chart. Okay, before I go on to the daily chart, just to highlight for Euro Yen, for those of you who have, let's say, read our weekly research last Monday. So last Monday is basically 9th of January. This is the red dotted line is where the report is being written and published. So it says something like we are expecting the resistance to hold, and there's no reason, we don't see any reasons of euro strengthening beyond the resistance. So we actually given a suggestion to short Euro Yen during our weekly research. So if some of you have picked up that suggestion, I think that would be a good trade riding downwards as well, regardless where is your entry price. But hopefully you did not enter a short over here way at the bottom. I mean somewhere above, after you have read the research, if you have taken a short positions, I think that will be a good ride downwards. So that was highlighted in our last week research. Anyway, back to today. Request is on daily chart. Again, Euro Yen, a bit of fundamental. This week ECB is expected to announce their interest rate. Of course, we expect them to maintain their interest rate, but what is most important is the press conference that follows about an hour after it. Of course, there are investors expecting or looking out for ECB to drop some hints saying that they may be considering tightening. Reason is because the Eurozone data has shown improvement. But in our research today, we are quite skeptical towards that thought. So for us, we don't really expect ECB to start considering tightening at all at this moment. Main reason, there's a few reasons. The first reason is basically there are still a lot of uncertainties the next few months. So if they make a hasty decision in such an early part of the year, it could result in irreversible consequences. So I think they will still maintain a cautious mode. So of course, the upcoming risk is, the first one is in April, French election. So I don't think ECB wants to go ahead to do any or consider any tightening before that political risk. So at least they want some room to play with, and they will not want to jeopardize the fragile recovery at this moment. So of course, the other unknown factor is after Donald Trump being sworn in office, what kind of policies is he going to implement, and will there be any impact to the Eurozone? So at this moment, no one has the answer unless the actual thing is being announced. So these are the unknown factors. Of course, there are other that is unforeseen. So as I've mentioned last year, towards the end of last year, after Mario Draghi has extended their stimulus from September to end of the year, this is a clue that even ECB is preparing for all these unknowns and uncertainties. So that's why they are extending their stimulus to the end of the year before making a decision again closer to the date. So we don't expect ECB to change their bias. They will still remain cautious at the moment, but I don't think they will expand any stimulus at this moment as well after they have done it in the last round. Doing it again is too fast, and there's no reason to do that at this moment. So having said all this, Euro is, I would expect Euro to be quite neutral for this week, right until Thursday when ECB press conference. For this pair, Euro Yen, it could be safe haven, driving or determine how this pair would go if there's a lot of uncertainty whereby the flow move towards safe havens, Yen being one of them. Then of course there's a chance that Euro Yen may head lower. But of course, if there's a flow towards risk appetite, then the opposite will happen. Yen is likely to weaken, thereby Euro Yen moving higher. So having said all this, instead of looking at the daily chart, I prefer to look at H4 because to refine the possibility of a trade. Of course, if daily chart gives me also a nice picture where I can determine at which price to go in, then I will use the daily chart. But if I use a daily chart, do take note, most likely the position in terms of pips will be bigger. You will be in the range of 100-150 pips kind of position. So whereas if you zoom down to a lower time frame, the positions tends to be smaller, and it will be able to, most of the trader will be able to take a smaller position. And the other advantage, of course, it happens faster. But having said that, it doesn't mean that you must force yourself to trade a lower time frame. So unless you see an opportunity in a lower time frame, then you go for it. Just like this example, I'm not forcing myself to go into H4 from a daily chart. It just happens that H4 present me an opportunity on an area where I can decide where to go for the trade as well. That's why between the daily and H4 chart, for this example, I prefer H4. It gives me an entry earlier. So basically the area that I have marked over here, like I say, is an area, it is not a specific price, so it is about 120.90 plus minus. That is the region where I feel that it is a place for the market to make a decision. So again, if the price closes below into the blue box, closes into the blue box or even lower, that could be a place for you to consider going short. Okay, let me zoom in because so that the candlestick will looks bigger. Okay, so this would be the area. Once it closes into the blue box or slightly lower is fine. But at least must be inside the blue box or lower. So if the closing candle is above it, it doesn't fulfill our criteria or my criteria for an entry to go short. So the price around the box is about 120.60 plus minus. So of course the other opposite is if the price bounce up and close in the upper box. Okay, about 121.25 plus minus a few pips. So that would be if the price goes close into the box or higher, to me, I interpret it as the market has made a decision to go higher. That's how I interpret it. So that's a Euro Yen suggestion for this week. I will put the red dotted line as well. So this is the current time. So we can do a review next week. Next chart or next request on my screen would be gold. Gold H1. Yes, there's a few requests on gold. Gold, silver. So I'll take a look at gold, silver at the same time because yeah. Daily chart H1. They have the request came in at different time frames. So what I'll do, I'll just open the gold chart, and then I'll just pick one time frame to give my opinion and my suggestion. Otherwise, if I give suggestion across different time frame, it may be confusing. Because if I give suggestion in different time frame, you will end up over at a certain time frame. I'll say possible short here, and at a higher time frame, I may say possible long at the same area. So in that kind of a scenario, it can be quite confusing. So this is a gold chart. Let me open up the silver chart as well. At this moment, if you are considering taking gold and silver trade at the same time, be aware, at least for this week, they are pretty correlated in a way because dollar is the main driver for gold and silver, at least for this week. So if the dollar weakens, gold and silver is likely to go up. If dollar strengthens, both are likely to come down. But of course, they may not go up and come down with the same magnitude. It doesn't mean that gold goes up by $1, silver will go up by 50 cents. There's no such proportional so-called value. But generally, the direction will be quite in tandem. So as you can see, the left side is gold, the right side is silver, both daily chart. So like I say, the general direction is more or less the same. As you can see, it comes down and then goes up. Gold as well comes down and goes up. So of course, on the silver side, there's certain volatility. It goes down, goes up, and before going down further. So like I say, correlation, even if it is correlation, it is not always 100%. Anything above 90 or 85% and above is considered highly correlated. And remember, even if it's 85%, there's always 15% of the time where it is not correlated. So at this point in time, looking at both charts, gold is retracing. Gold has a nicer movement, as you can see. It's clear cut all the way down, and now it's rebounds all the way up. So unlike the silver, there's some volatility. It comes down, go up before going down further, and now it's coming up. So like I say, I prefer to just choose one to give my opinion at least. So gold looks to be have a nicer so-called price action. So that's the daily chart. But this week, it depends on end of the week when Donald Trump is being sworn in, what he says during his speech. I think that will have quite a fair bit of impact. And he has seen how, without any specific, has resulted in the sell-off in the market. How dollar has so-called weakened without any specifics from him. So I believe he will keep the hope going by reiterating his plans that he promised after his victory. At least that's what I believe, or we believe, but it may not be true. So it depends on what he says towards the week. So at this moment, if he continues not to give any specific, by the end of the week, chances is gold will hit higher. So at this point in time, I do expect gold to hover for the next few days leading up to the end of the week. Daily chart is tough to determine the decision area, as you can see over here. So I'll try to go lower time frame to tell me where to refine the entry for any possible trade. So give me like a few seconds to quickly just glance through the chart so that I can pick the area that I see at this moment. Okay, done. So I'm going to mark the areas, basically the resistance. For gold, even if it's a plus minus $1 difference in the price, is considered quite minimal. Okay, the two area is around 1207 and 1189. So here are a few suggestions. Based on a short-term momentum, you can see a 4 bull candle heading upwards before hitting into a resistance of 1207. And there's if you notice, I'll zoom in even further for in case some of you are watching, or most of you are watching at home actually. So in case some of you having trouble with the resolution, I'm going to zoom in. Where the blue box is, this is what we call a bearish engulfing candlestick pattern. So after the pattern, this is, if you want to go in for a short, that will be trading the pattern, which is around the 1202 official around the opening price of the next candle, which is around 1202, that would be the entry price to go short. So price has retraced upwards, so now it's about 1203, giving you a slightly better price for entry to go short. So if you are trading the candlestick pattern, this would be the entry. So for those of you trading with candlestick pattern, in case some of you are wondering why do I type the comments after I speak, the main reason is so that I can review it in next week. I don't need to remember what I have spoken, so I'll just type it in as a form of diary and a record. So I put a vertical line as well. That's the vertical line. Okay. So that will be a candlestick pattern to short go in the consolidation. So to me, there's no higher high made after the last high over here. Last high is over here. So after this high, there isn't any higher. Higher means candle closing higher than it. So I don't consider shadows that goes beyond it. So unless there's a body that closes higher than it, then is it, to me it is considered a higher high. But at this moment, it has not occurred. So to me, I interpret it as the boom momentum is slowing down. And based on fundamentals, I do expect market to be consolidating. So that would be the reason for me to go short fundamentally. And plus, on the technical side, there's a bearish engulfing pattern to go short. So this is my reason to go short. So of course, that would be the first suggestion over here. Then of course, some of you will have a different opinion. You think that, oh, the prior momentum is going up. You don't like to short when the momentum is going up. It is fine. So you give this suggestion a miss. You can always look for other suggestion or other trades. So of course, the other suggestion that we have, or I have, would be once candle closes beyond 1207, let's say around the price of 1211 plus minus. So candle closes into the blue box or beyond, that would be a consideration to go long. So that will be the goal suggestion on H4 for this week, our suggestion. And the next chart or the next request on my screen would be pound dollar M30 chart again. So we have looked at last week. Oh, just in case, backtrack a bit. Now then I realize I have placed a comment over here. Possible short when stochastic is in overbought region. So overbought region is somewhere over here. So the first time when it went into overbought region, this is about this price over here. So of course, if you have placed a short, after the stochastic, thereabout. It depends on how tight is your stop loss. So if you have placed a 30-40 pip stop loss, this would have stopped you out before market move in your direction. Anyway, now we look at for the upcoming week, M30 pound dollar. I will remove all these comments. Okay, this is what happened to pound dollar. Big gap, as you can see over there. This is a weekend gap. Over here, as you can see, empty prices, no price. Friday closing, Monday open. So this is about 170 pips difference. So how to trade the M30 for now? I personally will not trade the M30, or rather I will not trade the sterling pair. Main reason is because tomorrow, the first thing is tomorrow morning about 2:30 a.m. GMT plus 8 time zone, Bank of England governor is speaking. Of course, we do not expect much impact from his speech. Rather, towards the day, we have no idea what time. Chances is it will be between tomorrow afternoon when UK starts the day, which is around 2 to 3 p.m. GMT plus 8 time zone. That will be the start of their day. And of course, we don't expect the UK to wake up, UK Prime Minister to wake up at 6 a.m. to give a speech. Quite unlikely. So during the day, from 2 p.m., 3 p.m. onwards until all the way midnight or 1 a.m. That's the late evening time of UK. So between this time, depends on when UK Prime Minister wants to speak. So it will be a lot of unknown and volatility in the market, and most importantly, market will not care about any technicals, any candlestick pattern, any chart patterns that is appearing on the screen right now. So there's I don't feel there's a reason for me to take a trade based on any patterns or any technicals that I've seen, because tomorrow everything will be out of the window depending on what Theresa May has to say. So that's my comment on pound dollar. So at least you know where I'm getting at. So if I don't see a trade, I have to tell you I don't see any trade. Okay, I'll just put my comments here. Okay. So if you ask me to predict, which I don't like, I prefer to react, but if you really want me to predict, I would expect UK PM to announce something that is in the direction of a hard Brexit. So if that really happens, possibly we could see pound dollar actually heading below 1.20. So currently the technicals is supported at 1.20, which is the round number. So in the event when she announced anything concrete, or her intention or her direction is to go for a hard Brexit, then possibly we could see a pound dollar going below 1.20, which is the 32 years low. That means it's the lowest in 32 years. So that's pound dollar. Next request on my screen is basically euro dollar H4. Okay, let's look at euro dollar H4. Okay, this is euro dollar H4. A bit not so nice in terms of the price action. A lot of shadows. Why do I say a lot of shadows? You see, let me zoom in. Okay, the first one, very long shadow over here. These are the shadows. Shadows are like when I look at the chart, sometimes I ignore certain shadows. I take note of the certain shadows. I believe some of you will have a question, Wayne, which shadows to look at, which not to look at. How I look at shadows in layman term, let me use an analogy. It's like if you look at your hair, when you wake up in the morning or something, you look into the mirror, and typically you will notice strands of hair that is protruding out, that is out of the norm, which is not falling nicely in place. You have a certain strand of hair that is out of place. You tend to look at or notice it. So I hope that analogy helps. So when I look at the chart, when I see shadows that is out of place, not following the norm of the other candles, then I'll take a special note of it. So just like the three shadows that I have identified, it seems like a sudden movement out of nowhere. And with all this shadow, it is telling me that there's a lot of uncertainty in the market. That's number one. And such shadow is not that favorable for a trader, because it could just spike and then hit our stop loss if there's a lot of such occurrences. So this is a telltale sign of volatility when there's a lot of shadows that you have seen in the chart. That's number one. Number two, if you look at the movement, just take a look at the overall movement of euro dollar. The picture or the story that it is telling me is it has a lot of uncertainty. There's no clear-cut trend that euro is weakening against dollar or dollar is weakening against euro and vice versa. So there's a tug of war between both euro and USD at this moment. Interestingly, even though there is a divergence in terms of their policies, meaning that ECB is on a easing mode. Okay, they are still extending their stimulus, whereas US is on a tightening mode. They are looking into rate hike. But because of the uncertainties that is looming in the recent weeks, you see the euro dollar not heading downwards. Because given that kind of divergence, euro dollar should be heading downwards towards parity. So this kind of movement is telling me market is unsure of US tightening plan. So they want to have more concrete so-called proof or reasons to believe the 3 rate hike has a higher chance of happening. So to me, after the first rate hike that happened then possibly euro dollar will start to trend downwards again, or there's a high possibility of the first rate hike in 2017 happening. When that time comes, then possibly we'll see a nicer trend of euro dollar downwards. But for now, because of all the uncertainty that affecting these two currencies, chances is euro dollar will be in such a fashion. To me, it's messy. Okay, messy because I can't find an area to tell me, oh, this would be a decision region where if the price goes higher, chances is it may go higher, or if the price goes to the price, chances is it will go lower. So I'm not able to find that kind of region on euro dollar at this moment. So this is really not a chart for me to trade. So I'll put my comments over here. So that's my reason. I cannot identify possible decision area to tell me where to expect the price to go. Next request on my screen would be, wow, these are all the equities. Okay, I'll leave the equities to the final. So don't worry, I will not skip it. So because I see there's a few equities, I'll take a look at the next request, which is Aussie dollar first. Then I'll go to the equities, no worry. Aussie dollar. Okay, let me look at this. Is M30 time frame. M30 and H1 shouldn't have much of a difference. This would be the H4 time frame. Okay, just for your information, just take a look at the overall chart. And then I prefer to, oops. Okay, this is the H1 time frame. Okay, as you can see, Aussie dollar has been pretty much on an uptrend since the start of the year. Possibly things will start to change towards the end of the week, depending on what Donald Trump has to say as US president. Currently, what he say is only as president-elect. So end of the week, when he's sworn into office, I'll be looking out of what he has to say as US president. Okay, after the uptrend, the bull is momentum is slowing down as based on the price action. You notice the highs are not going higher. It is in fact coming down. So this is a telltale sign that the bullish momentum is slowing down. Okay. So based on this, I would expect I will be looking out for one possibility at this moment, especially if Donald Trump gives some reignite hopes of tax cut and fiscal spending that he's planning to roll out. So during his speech, if he mentions something like that, possibly Aussie dollar will break this support to head lower. So the support is about I like to see round numbers, maybe around 1.7450 plus minus. That will be the support area. So once candle closes below it, 0.7438 plus minus closes into the blue box or slightly lower or lower, that will be a possible entry to go short. So that would be my suggestion for Aussie dollar. So basically, I picked the side whereby Donald Trump will announce something interesting, or rather to follow up with what he has promised after his victory. So this is the Aussie dollar suggestion over there. Finally, let me go to the indexes. Okay. Let me open up the chart. The request is DAX. DAX is basically the German index. And there's a request on Dow Jones, Nikkei as well. Pretty much almost all three indexes is in consolidation. This is on H4 chart. So if you look at the D1 chart as requested, they are all in an uptrend. Okay. So the first one is DAX. The quick summary on all three, like I mentioned, they are all in an uptrend, and in the near term it is consolidating. So that's the general idea for all three indexes that I've seen. So instead of waiting for a daily chart, I personally would prefer to go lower time frame to refine the entry. So for example, I'll go one by one, the DAX. So this is German DAX. If you have noticed our weekly research for this week, we have taken a look at this instrument as well, the DAX. So let me zoom in to make the candle looks bigger. So the support that we have identified is here. Okay, very nice support around 11530. So as the stimulus is ongoing, and I do not expect ECB to even consider tightening, so chances is it will still be beneficiary for the German stock market. So of course, if Donald Trump announced fiscal spending, it is good for risk appetite as well. So certain risk appetite flow may affect the German index, pushing this index higher. So I do expect the support of 11530 to hold for this week, but like I say, the reason of me marking this region is this is a decision region. In the event that prices close below it, then I will not hold on to my opinion anymore. I'll just react to the market. So as a trader, you always react to the market. So if it closes below 11530 and closes to, let me refine it further. Okay, 11490, thereabout, closes into the blue box or lower, that would be the suggestion to consider to go short. That's number one. Then the other suggestion is, now you see a candle, it seems like a doji over here. So aggressive would be enter to go long at the current price, if in anticipating for some risk appetite flow to come to follow towards end of the week. I don't foresee any risk flow to come as early as tomorrow or Wednesday. Chances is will be towards the ECB press conference and towards Friday, when Donald Trump is going to be sworn into office. So the aggressive one will be after it is actually giving an entry to go long after a doji over here. So that's a suggestion for Euro, for the DAX. Next, for Dow Jones. Okay, so this is Dow Jones. Again, if you notice, the price has been going up, and in the last 1.5 months or so, the market has been consolidating over here. So I would prefer to zoom in to a lower time frame like this. As you can see, it presents me with a nice consolidation range. Let me zoom in. Okay, before I zoom in, I'll look at the overall picture like this. For normal trading, in case some of you are wondering, I'm looking, for my own trading, I'm looking at a candlestick that is this size on my screen. Okay. The reason why I zoom in is for the benefit of all of you who are watching it at home. Because of resolution, it may not be so clear on your screen. That's why I zoom in. But let me mark the area first before I zoom in. Otherwise, it may not be as precise, or the area may not be the area that I wish it to be. Okay, it is very volatile. A few points doesn't make much of a difference. Make it a round number. Nice. Okay, Dow Jones basically is these two region, 199990 and 19770. So I'm going to zoom in now, since we already marked the two areas. So this is basically the two areas. So from now until end of the week, I do expect again Dow Jones to be consolidating between this range. Reason again is market is waiting. So no point making any move at this moment. So if you are investor, you want to invest in US stock market, chances is you want to see what, or you want to have a better idea of what Donald Trump is going to plan or going to execute once he becomes the US president, before making your move. So I expect Dow Jones Dow Jones to consolidate until end of the week. So I'll put my comments here. So meaning to say that prices is likely to fluctuate between or trade between these two range, that's support and resistance. A suggestion would be apply any short-term intraday or scalping strategy. So my suggestion, possible to apply intraday or scalping strategies to grab some small pips beyond from this consolidation. And if you ask me, I will place my stop loss beyond the two region. Meaning to say, if I short, I will place my stop loss above 19990. If I long, I'll place my stop loss below 19770. So that would be our suggestion or my suggestion for the Dow Jones for this week. And then of course, if you look at this okay, I will mark the areas. Okay, after whatever happened, this one most likely will be next week. Most likely, if it ever close below, that would be a possibility for a short. And this one would be the possibility once candle closes higher into the box or higher. Let me see what's the price. Okay, the upper box is about 20,025. So once candle closes into the blue box, possible to go long. And the bottom one, once the candle closes below around 19735 or lower, possible to go short. So this is the two suggestions. Most likely it may happen after Trump is sworn into office. Okay, so that's Dow Jones. And finally the Nikkei 225 uptrend and also consolidating because it is not going higher. This is a daily chart. Daily chart is forming something like a double top. So even if I zoom into H4, you should see a double top as well. But since I can see it on a daily chart, I will just keep it to daily chart. And this would be a very nice neckline over here. Let's make it a round number, 18950. So that's the Nikkei. So of course price is heading towards 18950. So that will be the decision region. And if the price closes below, that would be a suspicion that the price may head lower. Closes into the blue box or lower, which is around 18830, that would be a possible entry to consider to go short. And the other possibility is you could wait, okay, because sometimes if you, for those of you trading double top or double bottom long enough, sometimes you may observe after the candle closes beyond the neckline, it retraces all the way up to hit your stop loss. So if some of you are don't want that to happen to you, the other consideration is wait for this to happen. Price close or doesn't close, never mind, it heads lower. So definitely you would have a close way below, and price go lower first, and then start to retrace upwards towards this 18950 plus minus, and it doesn't go higher and start to move downwards again, then that will be the time to consider to go short. And this is what we call area of conversion, when the previous support now forming a resistance. So if that happens, it should support the downward movement. But of course, even when I say it should support, always put a stop loss. You never know. As a trader, you can be wrong. And always have a stop loss in place to tell you when you are wrong, you cut your trade and limit your losses. So that will be a Nikkei 225. Of course, the other possibility of Nikkei 225 is to go long. But I prefer to see a bounce of 18950, and then with a bullish candlestick pattern, then I will go long. Okay, I'll put my comments here. So my comments are possible long after bullish pattern. Okay. A bullish candlestick pattern. Okay. So I just make some short form over there. Bullish pattern means a bullish candlestick pattern. Okay, so time flies. We have come to the end of today's webinar. Very fast, it's 90 minutes. So of course, a quick announcement before we end off tonight's session. So for those of you who have missed last week's webinar, we have written 7 trading themes for 2017. So that would encompass, give you a broad idea of what to do for the entire year. Do not miss it. So it is downloadable. You can access it via Fullerton Suite for all our clients. You just log into Fullerton Suite, go to Documents. These 7 trading themes is available in 5 languages: English, Chinese, Bahasa, Vietnam, and Thai. So do not miss it out. And for those of you who are not our clients yet, but you are interested to get this trading theme, feel free to register an account with us. Once you register a live account, you will be able to access Fullerton Suite, and you can go to the Documents folder to download these 7 trading themes for 2017. Do not miss this out. So once again, we have come to the end of tonight's session. So I hope that all of you have find this session beneficial, and was the information that we have covered will set you up nicely to make some nice profit this week as well. So this is Wayne signing off on behalf of Fullerton Markets. Thank you everyone for your kind attention, and look forward to seeing you next week, same time, same channel. So good night and bye bye.